The insurance industry has taught you that if you can't sell the right amount of coverage to someone for life insurance, then don't sell them anything at all. I think that is the most dangerous advice in our business, and I've got the numbers to prove it. Something is better than nothing. That is my first belief. And my goal with this training is to help you maybe think a little bit differently about selling life insurance in the P&C world and help you realize that something really is better than nothing. And yes, obviously more is better than something, but in this industry, we operate out of this belief that if I don't get them enough coverage, then I'm doing them a disservice. And I'm going to show you why that can be problematic for selling life insurance and really protecting people's financial futures in the P&C world. The industry's biggest lie, we've all heard it, and a lot of us feel this. And this is a biggest stigma in the insurance world. And it's that if you can't do it perfectly, don't do it at all. If you can't get them the full amount of coverage that they quote unquote need, then don't get them a policy at all. Selling smaller policies, you're doing your customers a disservice. And in this episode, I'm going to show you why this is just skewed thinking. I believe that partial protection is still protection. $100,000 for an average American will go a long way. In fact, it can be life-changing. All or nothing thinking kills protection. The customer who needs $500,000 but gets nothing because they can't afford $500,000. I mean, when are we doing a customer a disservice? When we're overwhelming them and we're not getting them any protection in place, or we're getting them some protection in place? Here's the reality. This is a statistic that should cause a lot of you to think differently about this idea that if we can't get them the full amount of coverage that they need, then I'm doing them a disservice. But take a look at this. The reality of your customers is that the median savings in an average American's household, okay, the amount of money that the average American has is $8,000. But some of y'all feel like you're doing your customer a disservice by selling them a $100,000 popcorn policy. But look, only 46% of adults have enough emergency savings to cover 3 months of expenses. I want you to think about that. And that came directly from the Federal Reserve and Bankrate. But those statistics are telling a story. Look, humans buy incrementally. Think about your life. You've bought your first car. You probably have a better car now. Maybe you bought your first home. Maybe now you have your dream home. Okay. Think about, a customer. You get them a policy to get them to the right policy. I mean, I think about this in my life. I mean, in high school, I was driving a tin can Honda Civic, and now I'm driving a Mercedes. Okay. And there were some cars in between, but, my first car led to a better car, something that I wanted. Same thing with our home, right? My wife and I, when we get married, we purchase a townhome. That got us to a different home that was a better home. And now, I would say that we're in our dream home. It's the same thing with life insurance. Humans buy incrementally. Get them a policy knowing that, look, we're not just going to write this policy and leave it alone. This policy is the gateway into the right policy. More policies die from hesitation than cancellation. This is a common belief that a lot of agency owners have, that if we're going to sell these smaller policies, they're going to fall off the books. My point is that the policy itself and the coverage amount is not the reason why it's falling off the books. The reason why it's falling off the books is because the customer doesn't see the value. And at the end of the day, when we're trying to write more life insurance, more policies will die from hesitation, analysis paralysis, overwhelm, than they will from cancellation. Okay. The sell you never close protects no one. And some of us are trying to sell the full 5-course steak dinner to people that only have time and are only coming to you for a coffee. Listen, big policies can cancel too. So we're not avoiding cancellations by writing smaller policies. Bigger policies uh, they will cancel too. We're not avoiding, cancellations by writing these bigger policies. What I really meant to say there. We're not avoiding, just because it's a bigger policy doesn't mean it's going to not possibly cancel. The bigger policies also cancel too. Okay. And look, the small policies, maybe we, write a smaller term policy for $25 a month. They lead to upgrades. If a customer tells you yes to buy a small policy, maybe you're positioning it to leave money behind for a funeral. You're getting them $100,000. You're getting them something in place. This will lead to upgrade paths. This will lead to maybe we can get them more coverage. Maybe we can get them $1 million in coverage so that it can pay for off the loans on the vehicles as well. Maybe that would also lead into covering rent payments for a certain amount of years. And maybe that gets you to $75 a month. And then that $75 a month policy, maybe in a year, you get in front of the customer and you hold an annual life insurance review. You show them permanent options and they want to convert some of that term policy to a permanent program. And before you know it, we're at $200 a month. And so, just because we write these smaller policies doesn't mean we're not going to revisit them and build upon them. Again, writing these smaller policies makes it easier for the customer to say yes to. It's easier to say yes to $25 a month than it is to $200 a month. But the $25 a month policy is going to lead eventually to the $200 a month policy if we do this smart. And here's the thing, your customers live in reality. Sometimes in the insurance world, we go throughout our day to day and insurance becomes just everything. We start to look at life differently. We start to look at risk differently. We start to think like insurance people because that's what we're dealing with every day. Your customers don't live there. Your customers live in their reality. And their reality is not that they know you for life insurance. Their reality is that they know you for auto and home insurance. And their reality, they're not thinking about this big grand picture when they call in to make a payment on their auto policy or to add a vehicle or maybe even a new household that you're quoting. They're not thinking about the big picture, in terms of life insurance. And yes, we want to help them get to that big picture, but we got to understand what their reality is. Their reality is that they're trying to be transactional in a lot of ways to take care of their auto and home insurance. That's what they're thinking about. Okay. What we want to do is we want to have contextual behavioral selling. Okay. We want to earn the right to make recommendations for life insurance within our P&C workflows. And for those recommendations to carry weight, for us trying to sell life insurance policies with all of these customers that know us for auto and home, it needs to be contextual and it needs to fit into the transaction. We need to understand the behavior of customers and prospects in the P&C world. And their behavior oftentimes is transactional. Their behavior, very rarely is, hey, I want to come in and I want to sit with you and for an hour and go through all my policies. They're not thinking like that when we get to interact with them. And so our life insurance approach should mirror this. It should be contextual. If they're calling us about an auto policy, how can we make life insurance fit in and complement that auto policy? If they're calling in to, make a payment, they're not planning to spend a whole lot of time with you on the phone. And so how can our life insurance approach fit that behavior, fit that specific transaction? At the end of the day, guys, it's not a separate pitch. That is, a lot of P&C agencies that struggle with life insurance treat life insurance as a separate thing, a completely separate approach and pitch instead of treating it like a natural extension. But the more that you understand about how your customers are thinking, the context behind each of the transactions, the context behind when you're quoting new households, and the behavior of that specific transaction and what the customer or prospect is expecting, the easier it is to layer life insurance in as a natural extension to the auto policy, to the homeowner's policy, to the renter's policy. And it doesn't feel like something that's completely separate. Because at the end of the day, guys, we are advisors. We are helping people protect their lives financially. And hopefully we have a holistic view of that. Hopefully we're not just streamlined to, hey, We need to get your auto insurance coverages exactly where they need to be. We need to get your homeowner's insurance coverage exactly where they need to be because there's big risks involved. Hopefully, we're taking more of a holistic approach and understanding that, like, look, there's a big financial risk that most people still have by not having any life insurance or not having enough. I mean, you guys know that, you guys know the deal. All of the GoFundMe's out there, people don't have life insurance. And the majority of the auto and home customers that we get to talk to and we get to serve are not educated on their options. They've never been given the option to get something in place. Listen, they came to us for auto and home, not life insurance. Okay. If we can't contextually have that fit inside the conversation that we're already having, they're going to shut down. They're going to feel like it's a bait and switch. Okay. And I've got some examples to really illustrate this a little bit. And it's Costco. For those of you that have been through Costco, you you probably go to Costco to go and get groceries or to go and get snacks. You're not there to talk about your phone bill. And you know what I'm talking about. You walk into Costco, you're probably taking a detour from the AT&T phone salespeople, the people that are trying to sell you a new cell phone plan because you don't want to be sold to. And the biggest thing is that you're not going to Costco to talk about your phone bill. You are going to Costco to get snacks for the Super Bowl. And so there is this natural sales resistance and sales pressure from these AT&T salesmen. And by the way, I mean, kudos to those guys and girls. I mean, they've got a pretty tough gig, right? Because people are streamlined. They're not going to Costco for the phone bill. They're going to Costco for food or to get snacks for the darn Super Bowl. And so that's why it feels like such a pitch in the PNC world with our conversations when we think about life insurance. That's why a lot of us have a hard time because we're triggering sales resistance without even realizing it. We're not thinking about the context, about why people come to us. Okay. And so, at the end of the day, guys, like the more contextual that we can make this, the more we can make it fit in with the auto and the home, the more that we're going to sell. Okay. So that's just what we want to do is we want to make life insurance fit the conversation they're already having. Think about it, right? Like how would life insurance complement an auto policy? Well, if they have a loan on a vehicle, we know that life insurance is designed to pay off loans on vehicles, cover debt. Why would we not want to position life insurance in a very simple, complementary way and position life insurance to pay off the loan on the vehicle as a starting point? You get to talk to people that are just purchased a new home or they just moved and they need to get renter's insurance in place. We all know that when people live somewhere, they have a home, if they've got a mortgage on the home, they've got monthly payments. And if they're renting somewhere, they also have monthly payments. Can we find a way to make life insurance complement that renter's policy? Maybe we position it to cover monthly mortgage payments for a certain amount of years. Maybe even, the homeowner's policy. Maybe we position life insurance to pay off all or some of the mortgage. Point is we want to make life insurance fit into the conversation if we want to have good conversations and have customers be open to our recommendations and not have them feel like this is a bait and switch. Oh, that's why they called me because they want to sell me something else. They want to sell me some more life insurance. They really didn't want to review my policies. They really were just trying to sell me something, right? But I'm telling you, we don't run into that when we make life insurance part of the conversations that we're already having with these people. Here's the real disservice: leaving people uninsured because the right policy was just out of reach. When you think about that for a moment, yes, having the right coverage is important, but having no coverage at all, that's the issue here. That's the issue. And sometimes because we're trying to go for too much too soon, we don't get anything in place. We cause analysis paralysis. Customers and people in general don't want to feel like they're making a bad decision. And so they'll sit on things. And we know how that goes, right? We have these good conversations, because it's a big decision that they need to think through, that they need to talk to their spouse because it's, $150 to $200 a month. They don't want to make a bad decision. They don't want to make the wrong decision. And so they'll sit on those things. but it's ultimately because we're trying to do too much too soon. And so, sometimes $150 is just out of reach for some people. It is. But could they maybe swing $20, $30 a month to get something in place? Absolutely. But we're not able to give them that option and that choice because we feel wrong about doing something less than what they quote unquote need. And here's the thing. There's a common feel that, again, I mentioned this earlier, that if we write these smaller policies, like they may not stay on the books. And I think there's a stigma around bundling, right? We're selling life insurance because we can get the customer a discount. And we worry that these smaller policies are just going to fall off the books and they're not going to be good policies. I'll tell you, they won't be good policies and they will fall off the book if we are not selling on value. Most of the policies that are sold transactionally that fall off of the books are the ones where there's not any value anchored to them. They're ones where we're just selling the life policy off the discount. They're ones where the customer really didn't see the problem that they face by not having any life insurance. And so they feel like they could cancel it because they don't see the value of the policy. I believe that value anchoring, helping customers see the value, understand exactly what this policy is going to do and what it would pay for and how it would benefit them and their family should something terrible happen, that significantly outweighs policy size. The policy size is irrelevant. It doesn't matter if you sold a $20 policy, a popcorn $100,000 death benefit policy, or a $10 million policy that's $300 a month. The policy size doesn't necessarily determine if the customer is going to keep the policy or not. What determines if they're going to keep the policy or not is if they see the value in the policy, if they see the real benefit, what they get by exchanging money for this policy. They see the benefit that their family wouldn't have to deal with this added financial burden on top of trying to deal with losing them. They see the benefit of not having to move out of necessity, their wife having to move out of necessity or have to go get a job or a second job, like that's what will cause people to keep the policy, not necessarily the policy size. Now, here's the framework. My beliefs are that, yes, something is better than nothing. Let's make it simple. Let's help people get something in place, but we're going to build on that something. My second belief is that more is better than something. So let's start small. Let's get people covered, get them something in place. Something is significantly better than nothing. And if you're still having issues with that, go do your research. Go find out how much money people, have, access to if something were to happen. If people had more money that they had access to, then we would have less GoFundMes. And I want you to just put yourself in that situation right now of a customer that maybe, a family member just passed away and, they don't have anything in place. And based on those statistics, if the average amount of money that people have is $8,000, that's not even enough to cover a funeral. Think about the experience of that family, of what they would have to go through, all of this added financial, just, annoyance and stress. And, in some cases, it can be a lot worse than others because people really maybe don't have the money at all. And so maybe some of the kids are, have to pull money out of their accounts. And, outside of the financial burden, just think about the emotional toll that it takes on these people that just lost someone that they love, but now they have to be thrown into this, this mess that can cause some issues with relationships, right? With their family. And, guys, people don't deserve to have to go through all of that. People don't deserve to have to do that. But the point is they don't know that they could get something in place. On the flip side, imagine if something happened and they were able to get $100,000. Think about what that would do for them in that moment. It would give them time. It would allow them to be able to heal, be with their family, and not have, maybe these relationships take a toll. Okay. But here's the thing is we're going to start small. Something is better than nothing. Okay. But then what happens is we're going to naturally build trust with them. We're going to prove the value. We're going to help them see why even this small coverage makes a lot of sense and would be very beneficial for them and their family. They're going to start to view us as someone that they trust. And then we can easily upgrade these things. Like it's so natural. And the thing is if people bought from you once, they will buy from you again. So stop selling perfect and start selling protected. The customers need it. Guys, if you found any value in this episode, if this helped you think differently, please like and subscribe to the show. And look, something is better than nothing. More is better than something. And we can have both.